Here's the problem with Tesla stock. Generally, when it comes to the stock market and stocks, whales, Wall Street analysts, and institutions is what moves the stock. And Tesla is not excluded. Retail investors like you and I, we don't move the stock. We do give it more volume and we do give it more base, if you want to call it that, but that's only if you're long term and you're still holding if the stock goes down 50, 60, 70, 80%. Other than that, it's these big guys, Wall Street analysts, institutions, and the massive whales is what moves the stock. And here's the thing, guys, all they care about right now is the auto margin, and as well as the short-term guidance. Nothing is priced into the stock except for energy, and that's to a limit, and autos. If I would want to give it a ratio, it would be 90% autos, 10% energy. That would be it. Maybe. There's a lot of people out there that's saying that FSD is baked into it. How? With what metric? Knowing Wall Street, they want actual numbers to go based on. There is no actual numbers to go based on. Yeah, 400,000 vehicles in North America that have full self-driving, $200 a month. Sure, but scalability, they don't think about the scalability part. That's why I say maybe 1% of that, it would be FSD. 90% autos, 9% energy, and 1% FSD. That's it. Long-term investors like you and I mean, I hope you guys are going long on Tesla, right? Bruh. But long-term investors like you and I, we care about the other things that Tesla is doing, FSD, but long-term energy, robotaxi, licensing for FSD. Like, we have so many things to look forward to, but these Wall Street analysts and all these other guys, they don't look to it. I get it. It's a speculation. You can't. It's hard to look 5 years in the future, 10 years in the future, especially when you're a Wall Street analyst. You're looking for the next 6 to 12 months. Totally understand. And that's where the opportunity comes for you and I as retail investors. But we price these in for the next 5-10 years. That's why we are going long. That's why we see the opportunity. If Tesla was only an auto company and did not work on energy, did not work on their AI, which was FSD, bot, and flipping getting into lithium refinery and so many other things and aspects that they're doing, for crying out loud, Tesla is a startup and a startup and a startup of a company. It's ridiculous. But if Tesla was purely a car company, hell no, I would be going all in into Tesla stock. I would probably have already sold all my shares and moved on to another one. Most likely it'll be S&P 500 ETF. But the reason why I'm going all in into Tesla stock is for these very reasons. Full self-driving, the AI, long-term energy, and licensing and robotaxis. That's why I have majority of my money in this stock. My stock portfolio, if not all my money, 99% of it is in Tesla stock. But Wall Street analysts and institutions, the problem here is they don't have those priced into the stock. And that is a good thing if we're trying to accumulate. You know, we have 5 years, 10 years before something really pops. That's something that we can look back at that time and say, wow, stock price was only $200, $150, $300. Valuation wasn't even $1 trillion. Holy jeez. What the heck was I doing? Just like how everyone is right now 10 years ago with Tesla stock and with many, many other stocks. So the opportunity is there for long-term investors, but for Wall Street, again, Wall Street analysts, institutions, the problem is they don't look that far and they don't speculate like how we do. And they don't add the FSDs and all these other things into their analysis. It's only until when Elon comes out, what they want with Wall Street, what I've came to learn in the stock market is that they want to be spoon-fed. Apple does it, Microsoft does it. They say that, yeah, this year we're going to be selling this much, our margins are going to be this much, we're going to be going that much and this much. Tesla hasn't been doing that recently. Like in their Q4 earnings call, they didn't mention any numbers whatsoever. They pretty much put a big blindfold on Wall Street saying that, hey, do your own research. I'm not going to tell you everything. I'm just saying that this year we're going to have a lower growth rate, not an actual vehicle deliveries. It's going to be more than 2023, but instead of being 38% growth, probably going to be 15-20% growth. So they go based on this. They go based on whatever they can get. They're lazy people when it comes to forecasting. They want to be spoon-fed by guidance. And if there's not a good guidance, which Tesla's notorious of doing that, they don't give good guidance, well then stock goes down. And it's been every single quarter that the stock's been going down 10% right after earnings call. And it's not a coincidence. Whether it was a beat or a miss or whatever it was, it's not a coincidence. It's because they don't give the right guidance. What Wall Street wants is that once FSD is solved or once FSD is going to be deployed worldwide, what they want to hear from Elon Musk or anyone on the team is saying that, yeah, this year we are going to be doing this much and we're going to be growing exponentially. We should be doubling our EPS. Until they don't do that. I mean, Nvidia did that like just last year and their stock popped. But until the Tesla team doesn't spoon feed them like that, the stock's going to continue to go down every single earnings call because they're not being spoon fed. They're not given a number, and especially with FSD and other things that haven't come to fruition yet. And until they do, it's going to be like this, unfortunately. So that's the problem with Tesla stock. The problem is that Wall Street analysts and institutions and all these other guys who have the money to move the stock up and down, they don't look too far ahead with Tesla. Instead, they look at other things, other companies with spoon-feeding guidance, and they go based on that. Now, because Wall Street doesn't care about the other things at the moment, 90% of the entire valuation, as I mentioned earlier, is all autos. The remaining 10% is probably energy. And we already established that Wall Street doesn't look 4, 5, 6 years down the line. Every 6 months, they look forward to the next 6 months. Every 12 months, they look at next other 12 months. And every 12 months, they look at the other 12 months. They don't look at 4, 5, 6, 7, 8 years from now. But if you know that Tesla's going to do great long term with their other products that Wall Street is not taking into effect into their valuation, FSD, AI, licensing, bot, and the long-term energy growth, and just so many other things that's happening in the company, well then imagine when they do put these other things into their valuation when it comes to fruition. Easily the stock's gonna be worth a couple of $1 trillion. And just like what happened in 2013, stock went up like 4x. Same thing what happened in 2020 when the stock went 20x, 15x. The same thing will happen again maybe in 2026, 2027. Not financial advice. When the FSD comes into fruition. The thing is with FSD, guys, it's never going to be 100% solved. Just like how human driving is never 100% solved. The only difference is going to be is that it's going to be 10 to 20 or 30 times safer than humans. And death rates, instead of being 1 million as a statistic, it'll probably be like less than 100,000. That's all that matters. That's all we need to know before FSD can start getting approved and rolled out to every other vehicle out there. That's all, but that's for a different video. I'll make a separate video on that. So hold on, Pejjy, hold on 1 second. Why did the stock drop so hard after earnings? Well, what happened? I mean, yeah, earnings call was bad and they didn't get the auto margins. Wall Street didn't like what they heard, as they usually do in every earnings call. So why did it react the way it did? The numbers were great. They have bottom in their margins. They have bottom in everything. And it looks like they're going to be on a slow uptrend. So what happened? Why did Wall Street dump everything? Well, again, this is because they didn't get the auto margins and as well as a good guidance on vehicle deliveries in 2024, which is absolutely silly. First, I understand the auto margins, fine. They didn't give any answer of that, whatever. That's with their short-term issue. That's their problem. The second thing is the guidance for vehicle delivery. The last time we got a vehicle delivery estimate was in Q1 of 2023. So if anything, they should expect it in Q1 of 2024, not in Q4 of 2023. So that was very interesting when I first found out that. I'm like, oh, wait a minute, it wasn't in Q4 that they mentioned it, it was in Q1. And yet they're all getting butthurt about that. So that's why the stock went down 10%. The guidance wasn't clear for them. And again, they weren't spoon-fed the things that they need to know. So they just dumped it. And that's why we got a massive 10%, 12% drop, whatever it was, which I'm happy about because if you follow me on X, man, I've been buying like a madman. At the end of the day, these analysts need something to go by to value the company. And if they don't get spoon-fed with actual numbers and estimates, they're going to find it difficult to value the company. So what will they do? They go and compare it to other car companies, to other energy companies. And they say, okay, so Toyota only did 10 million, they probably won't do 20 million, and their margins are like this, even though the Model Y was like the best-selling car, and that's twice the value of a Corolla, and it was never done before, and it probably won't happen again. Without them knowing a proper guidance and estimate, they now actually have to do the research, and this is how they do the research. They look at other companies similar to this, and they just compare with that, and they say, wow, 80 PE, Tesla should not. They're only a car company. They should be closer to 20 PE. Gordon Johnson. So because no proper guidance was made, Wall Street analysts would probably now give Tesla a lower PE, as the only thing they probably heard that was worth notable, again, 6 to 12 months, is that 2024 won't be much of a growth year. And I've mentioned this multiple times on the channel and X. 2024 is a recovery year for Tesla, setting the stage for 2025. But the analysts will sit back and say, well, 2024, if they're not going to be growing so much, why give them a high PE? We'll just wait another year, see what happens, keep the stock flat, maybe even go down a bit, and then we'll see what 2025 is, because they did mention compact car and so many other things that are coming. But that's the problem with Tesla stock. Only looking at the auto business and nothing else. 90% auto business, 10% energy, 9% energy, and 1% FSD, whatever. I mean, after all, how do you even value a company like Tesla when they're doing so many innovations, so many reinvestments, and so many things that nobody has ever done before? So with all that being said, with all the innovation that Tesla is doing and Wall Street is keeping a blind eye on, for me, that screams opportunity, and I'm buying. I don't know about you, but I'm buying. Comment down below. Are you guys buying? Or are you guys sitting it out? What are you guys doing with Tesla stock? Because if you're a long-term investor of Tesla stock, I'm talking about another 5 years from now, and you're holding, I think it's a good time to dollar cost average. Not financial advice, but that's what I'm doing, and I'm going heavy. But Tesla stock is down after guidance, after Q4 earnings, about 12 to 15%, which is a lot. You may be concerned about how low the thing's gonna go, and I made a video about it right here. You guys can check out how low this thing can go. Obviously, it's all speculation and what I think what could happen. So take everything with a grain of salt and do your DD, guys. Support the channel by getting some merch and subscribe, and I shall see you guys in the next video. See ya.